Hi, I'm Kevin Castaneda, and this is Kevin's Mindset, where we talk everything finance, investing, mindset, and productivity. And today we're going to be talking about EV stocks, and more particularly Chinese EV stocks like XPeng, NIO, Li Autos, and more. And the reason we're going to be talking about all of these is because of if you have been looking at the market, you know that EV stocks are down substantially, including of course American EV stocks like ChargePoint, which is a charging EV company, or Lucid Motors, which is obviously the company that just completed their merger, along with Tesla and many other EV companies. So we're going to be covering all of this in this video: what's going on, why it's happening, what we can do about it, how to invest, and what is going to happen in this coming week as my predictions. So if you do enjoy this video, go ahead and smash the like button, as I'd very much appreciate it. Very much helps out the video for the YouTube algorithm. Also go ahead and subscribe, as I post videos like this daily, and you can stay updated by subscribing. So hope you enjoy. Let's get right into the video. Okay, so with EV stocks, we have a lot going on. Now, we did have Tesla's earnings yesterday, and Tesla's earnings were kind of nice for us to, if you listened to the call, it was nice for us to see, and it was very important for us to pay attention to the key things and the key details that Elon was saying. Elon actually bowed out of speaking in future earnings calls because of the fact that he thinks his time would be more adequately spent if he was actually using it to push the business forward and working on new ideas and innovation and stuff like that, as opposed to telling investors over and over again that there's certain things going on in the present that they can't control. Like, they can't control supply chain issues that are going on, that are very prevalent at this moment, and that we've seen continuous for a while now. And we know that Elon cannot control these supply chain issues, and no company can, and that's what a lot of EV companies are struggling due to this. And that on top of many other things started dropping EVs today. EVs tend to trade together, and that's another factor that we have to implement. On top of that, we do still have these inflation worries. We have these COVID worries. We have a lot of worries going on. But for EVs in particular, specifically the Chinese EVs, they dropped substantially, with NIO dropping about 10%, XPeng dropping about 17%. And the reason for these drops was because of several things, but the most important thing when it comes to these Chinese stocks was because China has some more regulation coming in that investors who are invested in Chinese stocks do not like. A lot of people do not like this regulation that's coming in, and it can affect these companies quite substantially, and that's been reflected in the stock and how it's come down substantially. Now, if you are invested in this and you do think that it is a great bargain, then you could go ahead and buy the dip, and maybe it'll be a great choice. And honestly, I bought the dip a little. I bought some NIO. I'm thinking about if XPeng drops 20%, then I'll buy. I think that 3% is kind of important because I'm not sure if it drops to that 20%, I think tomorrow will bounce. If it doesn't, I don't think that tomorrow will be a bounce. Tomorrow might be flat, and I don't have super high conviction for XPeng, so it would probably be a trade for me. So I'm not 100% sure about that one. I did pick up also I picked up some NIO, picked up some Lucid, picked up a little Tesla. I think I'm gonna buy some more once I'm done with this video. But I think that keeping in mind all these things that are going on, I think it's nice to buy the dips. I think it's important that if you are invested and you have high conviction, that it's nice to buy these dips. It's nice to stay attentive to what's going on. However, not to panic too much, not to stress too much. If you're a long-term shareholder and you care about the company in the long term, these little dips are somewhat amusing. You just buy the dip, you're like, eh, and you have a little more of the company, a company that you love, for a bargain. That's kind of just how you have to look at it. And yes, it kind of sucks in the moment where you're like, wow, this is really dropping for like these silly reasons. But just because they're silly reasons doesn't mean that you shouldn't take the opportunity and shouldn't buy as much as you possibly can, which you probably should. This is not financial advice, nor am I a financial advisor, but this is simply what I'm doing. I think it's very intelligent to go ahead and buy more of a company once it's finally dipped. And we're finally starting to see these dips. We're starting to head back toward those March, April levels, which were very juicy and very, it was very nice to buy at those times. I'm sure you remember, if you were investing back in a few months back, that in March and April, we just kept seeing these dips, and we're like, wow, let's buy, and everything was a bargain. And then eventually, I'm sure that you don't have infinite money the same way I don't. I started running out of money, and I'm like, damn, I wish I could buy more and more and more. And eventually you just get to a point where you run out of money. And yeah, that's unfortunate, but that's just kind of how it goes. And it's very exciting for me to see this now, because we're heading into this period where EVs are starting to sell off again. And of course, the rest of the market is having some issues. If you watched another video previously, I talked about some other issues in the market, but more specifically to EV, we're having those supply chain issues. Tesla's earnings were pretty good, but they still did just like show us like and tell us, hey guys, there's some problems. We still haven't been able to overcome these problems, and they're probably going to persist for a little while, which was kind of a wake-up call for a lot of people. On top of that, with Lucid going public completely and having the merge completion, I think that also opened up a lot of eyes to, hey, there's a lot of competition going on, a lot of competition, with Mercedes allocating 80% of their budget towards EVs, with level 3 autonomy coming forward. That's very, very, very big for the EV market. There's a lot going on in the EV market, and I think people are finally starting to understand that, and finally starting to like realize, okay, there's a lot of people coming in. There's going to be some people who die. There's going to be some people who get weaved out, and there's going to be only a few people left standing. And so with that, I think we're getting a lot of volatility in this market. We're getting a lot of worrying in this market, and I think it's just a lot of fear. It's plain and simple. It's a lot of fear going on, and I think some of it's very overblown. Like XBank going down 17%. I don't know a ton about XBank. I'm not a huge investor in them, but I do know that they're a relatively good company, and I don't think that they deserve a 17% dip just because of some regulation and because of some fear in the market. I think these are definitely some great pickups if you want to pick up some Tesla or any of these other EVs like Arcimoto, Neo, XBank, Lucid, etc. There's many great deals right now in the market. I think we might end up seeing some continuous dips. So I am DCA. I'm dollar cost averaging into all these positions. So I'm not dumping all my money today. I'm trying to see how it goes and buy in little pieces as it keeps dipping. And if it doesn't keep dipping, then oh well, I bought some today and we'll see some green tomorrow, hopefully. But if not, then I'm going to consider dollar cost averaging. And I definitely think that's a great strategy, and that's why I'm putting it forward myself. So I hope you did enjoy this video. Let me know what you think about the market in the comment section down below. Go ahead and smash that like button if you did enjoy this video, and subscribe if you are new and want more content like this, as I post daily and you can stay up to date on what's going on in the market. Also, if you do want to get up to $70 of a stock of your choice, go to the link down below and click on public.com, sign up, make an account, and you get up to $70 of stock of your choice. So if you want some Tesla on this dip, you get it for free just for signing up down below. Hope you enjoyed this video. See you in the next one. This was Kev's Mindset.